What is going on, everybody? Happy Monday morning. Welcome back to Man and Machine here with the PeakBot team, episode 209, with a very special guest today, Matt Cashman. Matt, what's going on, man? How are you?
Not a whole lot. I'm having a great morning so far. Things are chill here. How are you guys?
Not so chill in here.
Well, literally, we are literally chill.
Actually, you're right.
We're up here in the Northeast. We're in New Jersey. We got about a foot of snow.
Again.
And I'll tell you what, this is different. This is different than the last snow. This is igloo making snow. Like, this is tight and compact and heavy. I heard somebody call it heart attack snow because you got to be careful when shoveling.
Very much. I'm worried for myself. I texted. Man, I'm not kidding. I texted the group. The work group chat. When I say, "Hey, not sure when, but I'm gonna need to set aside some time to shovel." What they don't know is that means stretch, take 10 minutes to get my boots on and off.
Yes.
Do the whole thing. I don't have a snowblower. We're going manual today, and I'm worried for my back and my knee. But
I just bought one this year.
You did?
I did. I bought an electric snowblower.
Oh, okay.
Now,
all right.
Battery-powered snowblower.
Have you had to use it?
Yeah, twice.
Okay. And no problems?
No problems.
Oh my God!
It's fantastic. It's worth. I would say it's worth it to do that.
Yeah.
It's the first snowblower I've ever owned.
Okay. Wow. So electric for sure. Yeah.
It's good, bro.
Is it a fully blown snowblower? Or is it one of those like shovels that has like a snowblower attachment on it?
No, he's got the
it's like this
The
wide.
whole thing. Yeah.
It's big.
Yeah.
It's a big snowblower. It's like a regular snowblower, just without all the like, like I don't know.
Yeah, and the risk of it starting or not, which is really the whole reason I'm scared of getting one. Yeah, what am I thinking? Electric. I'm gonna have I'm in the process of moving, and I'm gonna have a real long driveway, unfortunately, and
You're gonna have a long driveway.
Gonna have a long driveway.
Oh yeah, dude.
No blower. It's kind of like one of these things where your driveway's like this.
Oh yeah.
So I'm screwed. Anyway, but we're good. We're good. And Ben, we're getting more snow. We're getting more snow later in the week, apparently.
Yeah.
Whatever. We can't complain. We're here complaining. There's some people with a lot more snow. But anyway, hey, we got a great
first world problems.
Very much first world problems.
First world problem.
Right. Yeah, and not to say the snow is the problem in third world, and all those things, but not here, not now. Okay, packed show. Matt, really quick, for those who aren't familiar, why don't you introduce yourself? Tell them what you do with the OCC and the
OIC. OIC. Yeah. Okay, so I was an options market maker for about 25 years. I was always a vol trader, so I've traded options on everything under the moon, essentially: commodities, bonds, single stocks, indexes. You name it, I've traded equities on it, or options on it. And then over the last 4 years, I have been the principal of investor education at OCC, which means I use all of that experience to teach people how options work. And so the little thing that's inside of OCC is called OIC, the Options Industry Council. It's a non-for-profit inside the OCC that was created, I think, in '93 to teach people about options, to basically educate the public about the risks and benefits of exchange-traded options. So that's essentially what I do. That is my mandate, and we are an industry-wide resource. So the information is available at optionseducation.org. It's free of charge, on demand. All you have to do is set up an account, password, and it's all yours.
Amazing.
Look at
we
that.
need more people knowing about options, man. We really do.
Amen.
What an eye-opening experience it was getting into that years ago. So glad to have you. Ben, where do we want to jam first, man? Are we going
I was thinking, let's do stocks in real life. Then we've got a really interesting segment with Matt on American versus European style options, given the introduction of Monday and Wednesday expirations for some single names, which we'll go over. And then we could hop into the bot shop, where we're going to dive into the vertical wheel. We wrapped up King AI not last Monday, because last Monday was President's Day. We didn't have our show. But the Monday before that, when we were live, we just wrapped that up. Now we're hopping into the next bot, so that way you can understand all that the virtual robot is doing. So let's get started with Ford. Ticker F, built Ford tough is the now. Sometimes we go through this segment and we don't know if the tagline is actually. I've heard this tagline before. Built Ford tough is on. It's on the commercials.
Yeah.
They've done a good job with that. Any life experiences with Ford, fellas?
I have no like direct life experiences with Ford other than probably 1,000 years ago when my mom probably owned a Ford.
Yeah.
But I do have a friend who drove a Mach-E for a while, and I made fun of him, and then I drove it, and I was like,
okay,
it's a decent car. It's a good car, right?
A Ford Mach-E.
Yeah, it's the electric battery-powered Mustang replacement.
Oh yeah, I've seen this thing. I think they're pretty slick.
Yeah,
actually.
Agreed.
What color is your friend's? Tell us.
Black on black.
Good. Okay, good, cool.
Oh,
Because they have some ridiculous colors for that car. I've seen some. Really
I'm sure.
Crazy.
I'm sure it can get very ostentatious. I'm sure, but so that's my most recent Ford experience.
Okay, excellent. Ben, I don't know about you. I know that Ben and I grew up neighbors, believe it or not, and
We did.
he was a minivan family, as was mine. Now, my dad was driving our minivan. He had the Ford. Was it Caravan? Or no, Ford. No, that's two. Yeah, Windstar.
Yeah.
Ford Windstar minivan.
Windstar.
One after another. I'll just pull this screen up just so everybody can. You see one of these on the road.
After another. I love it.
Oh yeah, he had
drive
like
it
3
into
or
the
4.
ground and buy a new one, and then drive that one into the ground and buy a new
Oh, yeah.
one.
That's exactly right. So this is what my dad was rocking for years with 2 boys and sports and everything else. He had a green one, not this old, but this is exactly what we were talking about here.
So good.
Oh yeah.
So many of these. And then Ben, I feel like your minivan was it a Toyota?
Toyota Sienna. That was the Colabella minivan.
And that thing had some miles on it, man.
You
I don't
know
know what year you had, but my God, that was a fun van. Anyway,
Oh, yeah.
no, we're not here to talk about Toyota though.
No.
So Ben, what's your Ford experience?
I don't really have a Ford experience either.
What was the car that Jeter launched? Derek, so big Yankee fan, Ben is too. When Jeter got behind, it was the Ford Fusion. It was the Ford Fusion that Derek Jeter got behind, big ads from years ago, and that's the only thing I really remember.
He was a spokesperson for the Ford Fusion.
I'm pulling it up if you guys are going to
my
doubt
God.
me.
Now
That's
he endorses Jeep, I think. Like one of the what's the big Jeep?
The Wagoneer.
The Wagoneer.
Grand Wagoneer.
That's ridiculous. Have you been inside one of those things?
Oh, yeah.
It's a limo.
My neighbor has one. It's
a
crazy.
limousine.
They're crazy.
Oh no, it was the Ford Edge. It was the Ford Edge commercial.
Yeah, I just pulled it up on YouTube actually.
Yeah. Matt, you a baseball fan or no? I get you.
I was the guy in the pit who, when everyone was like talking about baseball or football or whatever, I would just say sports.
Sports. Got it. You were too busy with options. I get it. Yeah, look, this thing. Come on, this ad sold 1 million of those Ford Edge right there. Look at Derek Jeter with the hairline. Still.
Oh wow,
that was a young.
Look at
Jeter.
that.
Wonder who he was dating at the time.
That's kid. That's kid and play, Derek Jeter.
Yeah, it is. So, well, let's talk about the stock quickly, Ben. I'll let you tell the people, but Ford, you have a funny relationship with the, stock Ford, don't you?
Hold on one second. I just got a bunch of feedback because I had this up on X. I'm trying to get X to work in the background.
Yeah, I gave up, man. I gave up.
Ford is interestingly, or maybe not, maybe it's only interesting to me, but it's a ticker that I'm always holding in my accounts, and I'll show you here. I'm always holding at least one share, and that's not because I am invested in it, although maybe I should be because this one share is up 45% since I bought it. But
good job.
Yeah, thanks. But we do a lot of testing at PeakBot, of course, and a lot of our testing requires checking or using API calls to do different things, and we need to see what an account looks like with an open position in it. So I always have an open position of Ford, and I don't know why that is, but Ford is always my ticker that I go to have an open position, so that way if we're testing over the weekend or outside of market hours or something like that, and we needed to have an account with a position, Ford's there. And now I've got American Airlines short as well, so we can see the short side. So those are the two tickers that are just going to live in my portfolio. Wishing that I invested more in both of them as we're speaking now, with a 45% and 9.3% return right there. But Ford, they're the test stocks, yes. So Ford is was one of the top 5 most wheeled tickers in 2025. And don't ask the data source on that. I Googled it.
Okay.
And
that was gonna be my next question, but we'll let that one go.
Well, I'll tell you this. I mean, when you look at the chart, it starts to make sense. 2025 was a great year to wheel Ford. Here it is on the map here. I mean, so we're through on the chart rather. So this is all of 2025 on screen, basically opening right around, I'd say, just call it $8 or $9 a share. A little chop. And then, yeah, it looks like really April, we start pulling off, and I guess a bit of a drawdown.
Always selling calls, never not selling calls.
Yeah, that's what they're doing here. So look, Ben, I remember when you were testing it, we saw the stock down here. Wasn't it $4 or $5 a share at one point? I guess it didn't get that low. Maybe
Look at it in 2008. Look at it in 2008. I remember that thing traded $2.
All right, so there it is. Any guess on what day or month this is? This really low point. Any guess before I click on it? Don't look. On what month in 08 that might have been?
I'm going to say October of 08, maybe December.
I was going to guess December, but yeah, let's see it.
November of 08.
All right.
Matt's been around the block.
Yeah, bro.
Yeah, wow. All right, so it touched 51 cents. Somebody filled it. 51.
That was a bad time for a lot of stocks, but really bad for Ford.
So, boy, all right. So, well, then since then, I mean, again, here's now the last 5 years. Okay. So I always like to see what it did in COVID. We can see it fell out just like maybe that's when I was remembering it at $3 or $4 a share. Roared back pretty good. Got back up to about $19 a share, fell down into this channel here between what looks to be $12-13 and call it $8.30. And it's kind of broken through that here as of late on quite a bullish run since beginning of February. So anyway, that's just a quick look at the chart. What do we think here? I mean, Ben, talking about wheeling it.
Yeah,
great stock to wheel, I guess.
Let's take a look at the wheel. You want to get my account back up?
Let's
I'll pull up the chain for this Friday's expiration, and we're going to talk about it today. We're going to talk about PeakBot's vertical wheel, so we can set up a vertical wheel trade and see what it looks like on the options chain here. So if we were going to be following PeakBot's rules here, we would look for the put closest to the 35 delta for our vertical wheel strategy. And we're looking at weeklies. So we're looking at this Friday's expiration. So the closest to the 35 delta is going to be actually the 49 delta here. So Ford isn't on the list for us to be able to automate with our new wheel bot, but we'll go through this example anyway. So we're going to actually sell here, and we can see Ford's current price is right at $14. So this week, in order for us to win this trade entirely and collect that premium and keep it all without getting assigned, we would need Ford to finish above $14 by the end of the week. Now, the traditional wheel will have us just sell a cash secured put. So we would just sell the the $14 strike. We would collect somewhere between 18 and 21 cents given the bid and the ask. Now that could change when the market opens. And Again, the traditional wheel would have us do that, and we would get assigned if price expired below $14, and we would just collect our premium and keep all of it if price expired above $14. But PeakBot is putting a little extra layer of protection, because with all automation, you want to be as protected as possible, in our opinion. So we're going to buy the strike that's closest to the 10 delta, which happens to be this $13 strike price here. So we would pay 2 to 3 cents for this, call it insurance policy, in the case that something like we just saw in the chart in 08 or during COVID happens, where price just falls out. You're not going to lose half of your investment here. In fact, the way that this is set up is you would only lose the price gap between $14 and $13, and that would be $100 of loss per spread that you're selling, less the amount of premium that you get for opening that trade. Any comments here, fellas, on the construction of this vertical wheel on Ford? And we'll get more into the vertical wheel in a little bit.
No, I think it's important to say it's not just a buck on this. It's in general, anytime you sell a spread like that, if both of those options go in the money, the spread itself goes to the distance between the strikes, right? So if instead of the 13s, you did the 12.5s, your max loss would be $1.50,
right,
minus whatever you brought in for the premium, right? Whatever you,
Yep.
because you're going to be selling the 14s for more than you're buying the 12.5s or the 13s for, or whatever. But in general, right, if spreads go in the money, they go out worth the most they can be, which is the distance between the spreads, between the strikes. That's all I would say.
Yeah, and I think obviously we'll get more into this. We're kind of parlaying the stock in real life with the vertical wheel strategy. But one of the updates we've made, the wheel strategy was actually the first ever option strategy that we automated over 3 years ago, close to 4 years. Originally, just the naked wheel, if you will, cash secured puts, covered calls. Got a little smarter about that after Upstart stock UPST went through an earnings report, and we had a ton of traders on it because it was at the top of our watch list, and they lost 60% of their position over the weekend. And anyway, I had to catch my breath. It was a traumatic time in our lives. We've sharpened up a little bit. Our new vertical wheel, which we'll get into, only trades ETFs and index funds. A list of 10 SPY, Qs, IWM, gold, silver, TQs, my personal favorite for smaller accounts. But anyway, so yeah, that was really my only thing. I told myself I'll never wheel an individual stock ever again, and I've had good. Not because I've been burned. Because I got lucky 2 for 2. I went Carvana in like 2022, Matt, and I made like 55% on wheeling Carvana. And then the Walmart was good to me for about a year and a half, 2 years. And then I'm TQs till I die, until I can afford Qs, wheeling Qs, But those are my only comments.
I do think it's interesting. I'll never wheel an individual stock again until the day I die, which that's a statement.
Oh, it's just no reason. Just no reason. We have the old wheel now on our platform, has that long watch list, 150, 200 trade ideas with, and look, there's great premium in there. And if you know the stock like the back of your hand, great. But you don't know if they're going to tweet something that they shouldn't have tweeted and ruin the market. And earnings reports. No earnings reports. I don't want to deal with earnings reports when we're wheeling, right, Ben? That was one of our original rules. We highlighted it in bright red. There's not enough upside for you to sell premium on a wheel strategy through an earnings report.
But yeah, that is our beliefs.
That I think that also, segues very well into what we're going to talk about later, which is if you're doing this on individual options, right? Those are American style options. And most of the time when you're trading index options, those are cash settled. European style options. We don't have to talk about that segment.
Let's head into that segment right now. Let's do it. I think now's a good time because we're going to pick back up the vertical wheel after we talk about this, because there is a very important distinction between American versus European styles.
I was wondering whose dog was.
Does your dog hear my dog?
Yes.
Oh, is that happening? Dogs are telepathic.
Yes, dogs on the internet. Yeah, exactly.
All right,
Exactly.
let's get these slides up here. Where's that button?
Scroll down. There you go.
So
There we go.
as a preface to this, the thing that I wanted to talk about today is essentially the difference between American and European style options. Now, some people are going to say that that is, a tired, old kind of thing and whatever. And I would say it is and it isn't. Here's the reason why it's particularly pertinent right now. And the reason why is because, I don't know, 3, 4, 5 weeks ago, the NASDAQ a while ago asked the SEC to be able to list Monday and Wednesday options, 0 DTE options on individual name stocks. So I look at that first and foremost, and I say, okay, well, exchanges do what exchanges do. I always say this: if you're a bridge builder, you build bridges. If you're an exchange, you list options, right? They have had incredible success in the volume that's generated from 0 DTE options in the index space. And I fully expected at least one of the exchanges to do this at some point in time, because there's a lot of volume that goes through these and people obviously like them.
Yep.
So anytime that you ask an exchange why they're doing this, they're going to say our end users have requested it, which is probably also true. So from my perspective as an educator, now I look to the second derivative of this and I say, okay, these are not, you check all the boxes and say, I'm guessing these are going to be American style options because all of the other options on US stocks, individual stocks, are American style options. And they say, yes, they're going to be American style options. And then I go, okay, I take a deep breath and I'm like, this is going to be interesting. And many people look at it and are just like, why does this even matter? And the reason why they ask that is because they don't understand what the actual nuances of the way that these contracts are designed changes the risk dynamics between American style and European style options. If you're only looking at the duration, if you're only looking at it as like the SPX 0 DTE option with 2 days in it, the 2 DTE option, and this Wednesday is a 2 DTE option on, whatever, NVIDIA, they look very similar, right? They are 0 DTE. They're expiring this week. They're expiring the same day, all of that stuff. One of them is American style. One of them is European style. The biggest difference between American style and European style options is American style options can be exercised at any point in their life cycle.
Oh, yeah.
European style options cannot be exercised before they expire. They actually expire and are exercised kind of around the same time. Now, the other part about this is that American style, so I'm going to pause there for a second. Do you guys have anything to add as far as experience with your stuff thus far?
No, we're on both sides.
Okay.
Truthfully.
We are.
Yeah.
Got
We
it.
are. I'd say for anybody watching this that is interested in these faster expirations for single names that are now available, and I'm sure we'll get into it a little bit more, but as you're saying, Matt, like exercise at any time means that you can get assigned shares overnight and when you might not expect it, and that could happen. I mean, it could always happen at any time. But with these shorter expirations, and Matt, correct me if I'm wrong here, but those early assignments typically happen closer to expiration, or if there's an event like a dividend payout that would trigger. So if you're not careful, you might wake up the next morning with either 100 shares or 100 shares short, depending on the side of the trade that you're on.
And we have this with our wheel stock.
Options. What'd you say?
I'm sorry, Matt. I was saying we have this with our wheel, it's not stock, bot, right? You gotta tell people early assignment is possible. Be ready for this on a wacky Wednesday or Thursday if we're doing the Monday to Friday. Go ahead. Sorry.
Exactly. Well, and that's why, right? You guys went through what you deemed as a traumatic experience, whatever. I don't want to say what stock that was.
Oh, that's right.
Whatever stock that was. And that's the exact reason why. right? You guys are seeing it from the actual operational risk side, right? The end user is seeing it from they're like, I have 100 shares of this stock that I don't even want, and where did it come from? And I didn't think this was even possible, right?
Exactly.
Okay, so that's what I'm trying to get across to people, and you're going to see me talking about this multiple times over the next like 2 months because of the fact that I think this is really important, and it's something that no one else is going to talk about, because it's not necessarily in anyone's economic best interest to talk about it. But I happen to be in a situation where like I don't get paid by anyone other than the OCC, and so my job is to teach people what's going on, you know. So here's the thing that you need to recognize between those two. American style can be exercised at any time before expiration. European style options exercise at the moment of expiration. Generally speaking, American style are physically delivered, which means they turn into stock when they are exercised or assigned if you're short them. And European style options, for the most part, are cash settled options. And so in that situation that you guys were talking about, where it's like something wacky happens and you have a European style option on, it's just a cash thing, right? Like, and if it happens at the moment of expiry, then, you know, sometimes those things happen, but it's just cash. It's not underlying. And quick side note, the reason why it's not underlying is because there's no actual way to trade the underlying because there is no underlying, right?
Right.
Exactly.
So the other part that I want to talk about here is slightly more complicated, but I do want to mention it. Each trading firm has a different window after the close and before they have to tell the OCC who's being, you know, who wants to exercise and who doesn't want to exercise. It's called the contra exercise window.
Okay.
The OCC has a standardized time, I think it's 6 p.m. Central Time, where the actual clearing member firms, the big firms who have relationships with OCC, have to tell us how many of these you want to exercise or don't want to exercise, essentially.
Yep.
But because of that operational risk profile that I just talked about with you guys, practitioners or trading firms or brokerage firms have the right to control their own operational risks by having their own cutoff time. That is before that 6 p.m. Central Time. And so you'll see different variations of that time depending on who you trade with. You need to educate yourself as to what that time is and whether or not you have good access to like being able to tell people that you don't want to exercise things, if that's the case, because that's what that window is for. Post-close, pre-exercise, American style options still maintain the ability to either be exercised or abandoned, meaning if something's in the money by a penny on the close and then after the close earnings come out and the thing drops by $25 and you're long that call that theoretically was in the money, if you catch it inside that window and you tell your brokerage firm you don't want to exercise that call, if you're long it and you say, I don't want to exercise, I want to give contra exercise notice.
Yeah.
That means that they won't exercise that call. And thus you will not own 100 shares of a stock that's likely going to open up down $25 the next day. Right? This is a big deal as well. But that is a subset of the difference between those American style and European style options. But it's still like it can be exercised or assigned at any time. That also works in your favor. It cuts both ways, right? If you're long it and you have it during that period, you can actually abandon it or what, you know, you get the vibe. But that's big, you know, crux of the whole deal.
That's super interesting. So you're saying that each call it institution has different timing in which this window is open for.
Correct.
That's interesting to know.
Correct. On American style options, right? I guess technically it's on European style options too, but cash settled European style options, because they settle to cash and the actual expiration is very formulaic. Very seldom do you see people give contra exercise on European style options.
Okay.
Because there's no economic incentive to do it.
Yeah.
Sometimes it'll happen at the end of the year for tax loss purposes. But other than that, you don't really see that.
I could see individuals potentially doing that as well to avoid the assignment fees that their broker might charge.
Sure.
Right.
Yeah.
Yeah. If it was like 1 penny in the money and you're not dealing with a lot of difference between the strike and where the stock is trading, so it doesn't really, right? Like it doesn't really make that big of a difference. Yes, I could see that as well.
And just to clarify for PeakBot users or those viewers who are, on the edge and thinking about hopping into automation here, our strategies, I said, we're on both sides, right? Like our BenBot daily covered call strategy on IWM, right? This is American style. However, a lot of our strategies, King Condor, King AI, Shorebo, these are all on SPX. All right. And this is cash settled. You're a winner or a loser at the end of it. There's no shares to be assigned or exercised. So, this is really helpful to know for automators with PeakBot. So I'll shut up. Feel free to continue here.
One other thing I want to bring to light is that I think in like the second week or something of these things being listed, Henry Schwartz from SIBO put out some volume numbers for them, and they were absolutely incredible, right?
I would imagine.
They were far and away beyond anything that I ever imagined they would be in the first week.
Wow.
I put out a LinkedIn post on it, talked about it a lot, and then I referenced Henry on it. I will say this, I think if I remember it correctly, on one of those days, I think it was like a Wednesday, 50% of the Tesla options on that day were Wednesday zero DTE options in Tesla.
That's
there
crazy.
was something like 1.5 million options that traded that week for Mondays and Wednesdays.
Was Tesla the highest volume, or what you can share? Was it
I don't
Apple?
remember. I don't remember. Let me hold on.
Don't worry about it, but that would be cool to know.
That would be interesting, fun fact. So quick comment on that, because we, if people didn't know, PeakBot works with partners and we build bots for partners. We've been getting requests to build bots based on these newer, faster expiring options on these single names.
On stocks?
On
single name stocks? Okay.
Yeah.
Yep.
And from our perspective, one thing that we need to think through as an automation provider is that assignment risk, and kind of what we're talking about here. When we're working with small accounts, we don't want to put an account. Of course, we're not financial advisors. We can't give financial advice. We can't tell people what to do or what not to do. But we can be explicit about what could happen in bot land here. And we've got to be cautious about allowing people to automate these faster expiring options, because a lot of people are viewing this, at least from the conversations we've had, they're viewing this from the perspective of a European style expiration versus an American style expiration, and all of the strings that are attached to that style of expiration.
Yes. This is the point that I think is really interesting, is that think about the number of people. I mean, think about you guys, right? Just you guys. Your experience with options has been since when? When did you start trading?
Well, we started automating in 2020 as far as options trading. Ben, I don't want to speak for you longer than me though.
Yeah, I've been almost 10 years now.
Okay. However, think about the majority of your customers and what their experience has been with zero DTE options and when it came from, right? Like everyone started, all you have to do is look at the OCC cleared volume and you can see that in COVID, everyone started trading, right?
Yeah.
Like everyone was stuck on their couch, everyone had STEMI checks, and everyone had access to zero cost brokerage. And so what did they do? All of a sudden they woke up to options. Guess what else happened at the same time? The indexes started having zero DTE options that were available at the exact same time. It's this like confluence of events that is pointing to everyone, not everyone, but the majority of new users into the marketplace have been doing this in a zero DTE space in a European style cash settled option.
In Robinhood.
And maybe, whatever, right? But I think the way that this is being rolled out is just like, well, these are just Mondays and Wednesdays on individual stocks, right? And it's the same thing. Guess what? It's not the same thing. And I think the majority of people who have traded it have only traded it through European cash settled. And so they're going to view it exactly what you said as like, this is the same thing. It doesn't have any strings attached to it. It's the same thing. It's not the same thing.
No. There's going to be an unspoken assignment. There's going to be accounts who don't have the cash, and they're in the margin calls and the maintenance calls and all of it. It's going to be tough.
So you asked for the actual numbers. Here's a quote from Henry's tweet. In case you missed it, Monday and Wednesday option expirations became available for 8 single stocks plus IBIT this month, widening the range of underlyings available for zero DTE and short dated strategies. This is basically from the SIBO, right? Today, nearly 4 million zero DTE contracts traded on these symbols. And with much help from AI and Copilot, I was able to use the SIBO Global Markets Trade Alert API to produce and schedule this daily zero DTE single stock flow recap. The number one was Tesla. It traded 1.3 million contracts.
Wow.
And that was 50% of the Tesla volume that day.
That's crazy.
The number two was NVIDIA. And it traded 965,000 contracts, and that was 37.2% of its volume that day. Okay, you get the idea. The third was Apple. It was over 500,000 contracts, 44% of its volume. Okay,
yeah.
So that's the reason why I'm kind of like standing up on the rooftop and shouting about this. Not because I want to dissuade people from trading them. I want people to use them if they want to use them. I want them to understand that they're not the same as European cash settled options. That's it, right? That's my 2 cents, and that's my soapbox. Now I will step down from my
shout it from the rooftops, Matt. Seriously,
I have a question. I don't know. I don't want you to step off your podium yet. Here's my question for you. What's next?
Oh,
is it more is it Friday expirations, or is it more stocks available on the Monday? What do you think's next? That
you have to think that it's everything, right? You have to just imagine that remember, bridge builders build bridges, right? Option exchanges list options. It's what they do. And so they are going to follow the volume, just like they did in the SPX, just like they did in the indexes, would be my guess. Now, caveat to this. In the actual piece of paper that NASDAQ filed with the SEC, they did make reference to the fact that there are idiosyncratic risks in single name stocks that do not exist in indexes. For that reason, they decided initially to avoid Fridays because of the afternoon risk and the whatever. So that's why they listed Mondays and Wednesdays. They also have the caveat of having specific liquidity provisions. That's how they choose these 8 different stocks. And that's reviewed quarterly at this point in time. So they will review the list of 8 on a quarterly basis. But I would imagine let me ask you this. If you were running NASDAQ or SIBO or any of the other exchanges and you saw these numbers, what would you do?
What's next?
Yeah, exactly. You would say, what's next, right?
Yeah.
Like, how do we, and your message can be like, how do we make this available to our end users so that they can hedge their risk in a more granular way? Okay, yes, that's the message. And but the other thing is, right, that there's 4 million contracts of zero DTE trading on American style options that like people just aren't, they're just assuming that it's all the same stuff.
Yeah.
And so I want people to understand that just like I would imagine that just like in the index world, things started on Fridays, right? And then they started on Fridays and Mondays, and then they added Mondays and Wednesdays. And then now keep in mind, in the indexes, it took them over 10 years to get to Monday, Tuesday, Wednesday, Thursday, Friday. I would think that number will be cut down significantly as far as timeline is concerned in this current marketplace, because of the fact that we've already had a quote unquote successful run of this in its first iteration, right?
Yep.
And especially if there's not an event that, just like the event that you guys talked about with your previous wheel strategy, that totally blows up the risk on some of these things for the end user. If we don't have that, But you have to understand that from the fact of the matter here is that we are changing the cadence of expirations, and thus we are changing the actual iterations of risk upon which like the end user is actually exposed to. And so that requires a certain amount of education to go with it. And if you think about it in a probabilistic way, chances are, no matter how careful you are with these things, that there's going to be an after hours issue, right?
Yeah.
And it's going to be like, how does the industry deal with that? What's the news flow that comes from that? Like, how bad is it? How, you know, those kinds of things. And so that's why I'm out here talking about it.
Well, I'll throw another comment in and would love to talk about it. Then I think we should probably wrap here. We're getting close to the bell. We've got 15 minutes. But one saving grace that we're seeing, at least, and I'll use the word dangerous because this is dangerous for those that don't understand American style options here, and they are trading these 0 DTEs on the single names. I'm very much looking forward to the SEC finally giving that stamp of approval on lowering the margin requirements for pattern day traders. That, in my opinion, can avoid a lot of I won't call it mistakes. It'll avoid a lot of, angst, because what's going to happen, what I think is going to happen, is a lot of newer traders are going to get into these 0 DTE positions, and they're going to blow through all of their day trades, not understanding the pattern day trader requirements, and then they're not going to be able to trade anymore. Matt, have you heard any recent updates on the SEC and their comments or
Matt wants to talk about it?
Movement on.
Yeah, Matt wants to.
Okay, all right.
That means Ben. Never mind. I won't infer what that means. I won't infer what that means.
I will say this. That that change has been discussed for a very long time, right? Yep. You are not the first people to have asked for it. There are many people out there that have asked for it for a very long time, and it is, still being discussed. Let's just
still being discussed.
Yeah. Okay. So, I mean, everybody in our world here is aware of FINRA and their request to the SEC for approval. So we're all just sitting here waiting for that. But anyways, back to the matter at hand here. I do believe that if that requirement is dropped down to the proposed $2,000 of margin requirement for pattern day trader eligibility, that will help traders in a lot of situations to avoid having to hold something overnight if you're doing 1 DT on like a Wednesday. And even if it is 0 DT, people not blowing through their day trades unknowingly.
Well, this is dangerous. Let me tell you, you're right. The more we talk about it, the more dangerous it is, and the more excited we are to automate it. Truthfully, you got to find the right approach. I looked up today's expiration on Tesla, just a little put credit spread, and seeing what it's. I was curious what it's paying out. Now we're pre-market. Obviously, we'll see what happens when we launch. But I went and grabbed the 26 Delta put and the 20 Delta. So just, a $250 risk, sold the 405. Didn't actually do this. Bought 402.50. Tesla's trading at 407. Paying credit, mid credit's around 46 cents. Again, we'll see what happens. But I can just see these swing traders all these swing traders out there are now going to be becoming day traders with, and it's going to get wild. It's going to get wild.
I just think I think all the signs are pointing to, the volume numbers were far and away. They were so much bigger than I thought they would be. I thought, to be honest, that people wouldn't understand that it was even out there. And then it would have been a sleepy kind of thing that would then take off, and the exact opposite has happened.
Wild.
Yeah.
Well, we're gonna have to have you on again to see how this develops, and then maybe 2 times from now we'll have be able to talk about the pattern day trader stuff. Who knows? But what else do we touch on here, fellas? I know we got the bell in about 12 minutes. I know we probably want to talk about economic events this week quickly. Ben, I don't know about the vertical wheel. I don't want you to have to rush through it.
Let's hop into the vertical wheel next week. I'll just quickly, very, very quickly, show the agenda. We're going to cover vertical wheel over the course of 6 weeks, so that way anybody that's automating the vertical wheel bot will be able to fully understand what is happening behind the scenes. So we're going to talk about the foundation of the vertical wheel, which we did touch on today, the weekly cycle, because this wheel bot is trading weekly expirations. When you get assigned, what happens when you get assigned, you start selling combo spreads. You will review all of the scenarios of the full wheel, what could happen in your account each week, and what an overall risk looks like, and running it live, what does that look like in your account? So make sure you tune in for the next 6 weeks to really learn about the wheel before you automate it, because with anything that you invest in, you probably want to understand it fully before putting your money there. But we are not financial advisors, cannot give financial advice. Actually, don't listen to anything Dillon and I ever say.
Yeah. Other than, hey, if our bots are hot, come check them out.
Oh my God, that's the best. That's the best disclaimer I've ever heard. Like, I'm not a financial advisor, so don't, anything that I say, please do not construe it as an endorsement or a recommendation to buy yourself securities. Also, we're really horrible.
Strike it, reverse it. Awesome. All right,
Right.
Ben, what do we got going on this week?
Real quick, just for those that watch this, to see if bots will be on or off this week. So this is what we've got coming today. Nothing to turn bots off tomorrow. We've got really nothing during the day. So 1DT bots from today going into tomorrow will be on. Now from Tuesday into Wednesday, we've got President Trump's State of the Union speech. 1DT bots will be off from Tuesday going into Wednesday. Never know what that guy's going to say. So we don't want
Especially now.
We don't want to be selling. There's no, in our opinion, there's no upside to selling through something like this. Wednesday, the rest of the day, nothing to turn our bots off. Wednesday going to Thursday, pretty quiet from our perspective. And then we do have PPI on Friday, but our 1DTs will trade through that. So really the only days that the 1DT bots will be off this week will be Tuesday going into Wednesday, with the State of the Union speech happening on Tuesday. And that's it.
Awesome. Excellent. Well, Matt, as always, we love having you on the show, and we will have you back on again, and we will see what's afoot in options trading at the time. I know we're always on top of the most recent action in this space, which is excellent, man. So was there any other parting messages you'd like to leave with our audience here before we part ways?
My parting words are just make sure you know what you're trading before you trade it. And if you need to educate yourself as to what those things look like, optionseducation.org is where all of our educational resources are hosted, and it's free of charge and it's on demand. And all you have to do is create a login and a password.
Amazing.
Love
Well,
it.
you heard it there. Matt, thank you so much for joining us. We will be live again on Friday, Ben and I, for the automation station, taking a little bit deeper dive into our automated strategies, results, and more. Thanks for joining us. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.